Shares of HTL Tech are higher after reporting its September quarter numbers. The company maintains growth outlook at 3 to 5%, while its advanced AI revenue exceeds $100 million.
And Anand Rathi Wealth trades with solid gains after reporting a good set of numbers. The company's profit rises by 6%. The revenue sees a 9% uptick to nearly 300 crore rupees. We'll be speaking to the management very shortly. Stay tuned for that.
Landmark Cars zooms in trade after a strong second quarter business update. The company's revenue grows 31%, aided by outlet additions and strong Navratri demand.
And shares of Just Dial trade under pressure as the company's slow growth continues in the September quarter. The revenue grows in single digits for the fifth quarter, while the profit falls by 22%.
A stellar listing on the bourses for LG Electronics. The shares list at a 50% premium at 1710 rupees against an issue price of 1140. The stock continues to hold higher by about 46%.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Mangalam. Well, Mangalam, the markets opened up in the green. We saw some kind of profit taking. Now it's more or less sideways. But I think the stocks that are deserving special mention is the new listing, LG. Yep. Blockbuster listing out there. I don't know whether or not, you're going to be getting memories back of Tata Technologies with the stock. We never saw those levels again. There's a lot of euphoria that's playing out there. Obviously, business is very, very different. And the other stock is Tata Motors. Yep. Actually, the business that's listed has listed at a bit of a premium in comparison to what the street was working with. 380, 390 was the number. I think the last time I checked, it was at around 415 rupees. So, X of the CV business, that's the PV business. A good listing, one would say.
A good listing for Tata Motors as well as LG Electronics. Let's see how that comes about. But the other stock which has been doing well today is Anand Rathi. It's reported a decent set of numbers where the revenues grew. We had a net profit growth of almost 6% as well. But more importantly, the AUM for the company has closed in on that 1 lakh crore mark in the second quarter itself, and the 1 lakh crore target was the end of FY26. What we'll discuss, though, is what explains the slowdown in inflows quarter on quarter, opportunities coming in from subsidiaries, and more importantly, other growth opportunities for FY26 as well. We do have Feroz Aziz joining in. Feroz, thank you so much for joining in. And as always, good numbers. You've been believing in, under-promising and over-delivering. But we have to keep asking you the questions on what the realistic numbers are. First 6 months of this year, you've already done close to 92,000 crores in AUM, or closer to 1 lakh crores. Your this year target was 1 lakh crores. And this at a time when the markets haven't done, a big move. From last summer to now, the Nifty is up just around 4%. So do you believe that you can do about 1.2, 1.3 lakh crore AUM by the end of this year?
Good morning, Mangalam. Yes, like you said, under-commit, over-deliver has been something which has been taught to us by our professional gurus, be the CEO, Mr. Raval or Mr. Rathi. Don't over-commit. That's always been the case. In that backdrop, upping the AUM number, I think, is not something which we will do in this quarter for sure. 1 lakh crore was an aspirational number when we began because we were at 75,000 crores the same time last year. And like you rightly pointed out, markets have not been at the greatest shape, but that's when you need to enter. So what makes us very, very happy is that this quarter, we got 100% jump in equity collection vis-a-vis the same quarter last year. When everything was hunky-dory, we were collecting less. When the markets were averaging at 24,500 this quarter, or 24,700 to be more precise, we collected twice more of the money. So if you actually get rid of your emotions and buy low and sell high is when you make money, especially in the long term. So to answer your question, we'll stick to 1 lakh crore as of now, and pray to the Lord, because AUM is a mark-to-market number as of 31st March, and that can sway here or there depending on where the market swings. But I think AUM is the last number anybody should look at a wealth management output, because that's at least in Anand Rathi, we measure it very meticulously. Not inflating it. Quite a few people in the industry go to my client who has a couple of 100 crores with me, get an advisory mandate signed for 5 lakh rupees and count that in their assets. That's how AUMs are flouted. I would say revenues and profits are a great barometer because those are bank account credits. And AUM is a number which is very difficult to measure, but Anand Rathi has a specific international measure.
All right, Feroz, hi, congratulations. over deliver. I think that's been the theme, and we have been observing that as well. So good on you. And by the way, I think I saw you at one of the offsites, getting onto the stage with some rocking music, playing out, all set to deliver. So it looks like the team as well is in a good mood, and everyone seems to be happy. But since you said we should be focusing on the revenues as well as the profitability, give us a broad guidance in terms of the revenue growth, the margins we're looking at, what kind of client addition are you looking at?
Yes, Nigel, now that you've brought the lighter note of the offside, I think we were all in a good mood because we were playing TV18 just before we started the conference.
That's the way, Feroz. That's the way.
I love you, Nigel. It's always been a pleasure interacting with both of you. Coming back, I think when it comes to, Nigel, you will have to get your question again.
Yeah, because the revenue growth, the profitability, you said, that's something that you should be looking at. By AUM, the number will take a bit of a back burner. So tell us, in terms of revenue growth, client addition, as well as profitability, what are the targets on those fronts?
Nigel, we have given a 375 crore PAT guidance. We're sticking to that because it's just half year. We have done 194, which is, of course, a margin of 52% penetration in 50% of the time. Revenue also, we have said 1175. We're sticking to it because we believe in consistent growth. So I think the probability of that happening has gone up dramatically after this quarter's result, and the mood and momentum is great. That's point two. Point three, we are also expanding our horizons globally. The lucrativeness of India in the minds of an NRI has shot up. That's one thing which we want to capitalize on over the next decade. Then coming to revenue growth, we personally think the revenue growth, and if anyone of our shareholder is listening, which I'm sure quite a few are, I think we look at how do we grow in the highest probability 20 to 25%. And we actually plan 5 years ahead. If you look at our revenues, if I need to grow at 20%, I need 236 crores of revenue per month in 2031 FY. And we plan at least 80% of that. And there is a method to plan in a business like wealth management. Nothing specific to Anand Rathi, but this business is about compounding because 10 to 15% growth is already in the pocket if you deliver good returns for the client.
So it's taken, we take that on board. You have given us the guidance. You always, like you said, under promise, over deliver out here. A couple of parameters I'd like your thoughts on. One, the last time you joined us, you said you're looking at least 200 clients per month in terms of an addition. If I look at the second quarter, that 200 per month run rate hasn't, played out. That's one. And secondly, RMs as well. RMs have grown by just 1%. I believe you're now consolidating and looking to grow the existing RM base and grow the revenue per RM as against adding more RMs now. Is that going to be your strategy? So on active client family addition and RM addition, if you could give us some guidance.
Mangalam, your memory is very sharp, and thanks for that. You're right. I had said 200 new clients per month is what we were gunning for. And first time last month, if I'm not wrong, we achieved 208. So we've not got there at the run rate level. At once at least we have touched that. So will that become our run rate 6 months from now? Very high probability. Whatever we achieve now, within a year, that becomes the run rate. So have we achieved that for the full quarter? The answer is no. I was also guiding it for the subsequent year, but yes, we got to it once at least. Then the second part of your question is how we could probably look at what was the second part, Mangalam?
The RMs, the RM addition and the revenue per RM.
Yes, absolutely. You're so right. We have actually moved up very small number. We were 374 last year. We are 386. Last quarter, we were 382. What we have tried to do is we have 100 people waiting to become RMs. So we don't believe that 90% of our RMs to have to be bought from the market. Like quite a few people get private equity money, they throw money, get people in, and then when they don't perform, they sack them. That's the one model which people are following to build valuations in our business. But we believe in training them. So 100 of them are waiting in the queue. We want to have, Rakesh sir has given us a mandate that there cannot be X number, which is about 80 of the RMs who are still building their book and they've not become private bankers in the Anand Rathi definition. So once that number becomes smaller, then we have more headroom for more seats which are empty. So we want to make sure that we're not biting more than we're chewing, point one. Does it mean that we are slowing down the RMs? The answer is no. What do we aspire to have? In terms of AUM per RM is 223. We want to see that number 5 years from now at 1,000, 7 years from now at 1,000 crores per RM.
All right, we take that point. 1,000 crores per RM is your target from here on. So that's the number that we will take away. Thank you, Feroz, as always, for breaking these numbers down. And when you're not talking quarterly numbers, giving us your help on personal finance on our channel as well. Thank you. We wish you good luck. But as you could see on your screen when Feroz was speaking, there was a money control stock score just above the line graph. Now, this is a score assigned to each stock based on money control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, which include both the current and historical financial statements of a company, price charts, technical indicators, and some fundamental indicators for each stock as well. Each of these parameters, considered for calculation of the 4 factors, are assigned a score which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. So just note that this score which is carried out basis a lot of analysis is the one that is on the screen, and investors or traders are expected to speak to their advisors and do the due diligence through their own certified registered financial advisor for investment decisions.
Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, let's welcome Religare Broking's Ajit Mishra for a technical check on the market. Hi, Ajit. Good morning. Good to see you win. Markets seeing some kind of profit taking from the top. What would you do, both on the Nifty and the Nifty Bank? And fill us in with your picks as well.
Yeah, good morning, Nigel. So, yes, we are seeing a bit of a consolidation. So, after last week of rebound, we are seeing more of kind of a consolidation similar to what we were seeing earlier also. Means every time we reach closer to around 25, 450, 600 zone, we see markets start seeing some bit of consolidation. But the good part is now the 2 key sectors, banking and IT, which was sitting on the sidelines earlier, they have started performing, they have started contributing. So we believe it's a healthy pause, and as long as we are maintaining this higher low structure, one should continue with buy on dips approach. Now 25,050, where the 20 EMA is placed for the Nifty. That's the zone basically where one should maintain a stop loss. And the moment we cross 25,300, because today being the weekly expiry also, we are seeing the call writers are aggressive at that level. The moment we cross, then probably 25,450 to 600 is something that the market is going to attempt. Banking, on the other hand, is looking slightly stronger. Means the private banking majors, we have results of scheduled in a day or two. So we expect that 57,000 is going to be the hurdle in the immediate future. So in case if we get any dip, intraday dip around 56,200, 56,000 zone, that's the zone basically where one can look for fresh long positions. Now coming to the stock specific ideas, we believe that sectors or themes which are holding strong, and from the capital good basket, L&T is one pick wherein we are seeing consistency in the trend. It's gradually inching higher, but after this consolidation range breakout, it's okay as long as we are maintaining the positive tone. So with the 3,700 as a stop loss for the target of around 3,900, one can go long in L&T at current levels. And at the same time, since we are seeing a shorting opportunity also in the market, Indian Hotel after this recent rebound is offering a shorting opportunity while it failed to cross this first hurdle of 20 EMA. And 705 is what we are eyeing as an immediate target. With stop at 739, one can go short in Indian Hotel at current levels.
All right, short in Indian Hotels and buy in L&T. Thanks a lot, Ajit, for joining in. With that, we're out of time on this edition of Chartbusters. Thank you so much for watching. Trading Hour comes up next.